In this video, we're going to do a portfolio update. I'll give you my performance history, what I currently own, and why I currently own it, and also a few stocks that I'm currently looking at. If you're new here, welcome to the channel. It's the Paper Bag Investor, where we're always looking for the next multi-bagger investment for your portfolio, and we're trying to find those investments and look at them in a really detailed way. So we have very high conviction behind them, which could allow you, if you're like me, to put a high percentage of your portfolio into these really big winners that could be huge winners over time. That's kind of my investing philosophy in a nutshell. Don't take my investing advice though. This is not personal financial advice, but I have been investing since about 2009 with about a 28% compound annual growth rate over that time. Wow. Make sure to subscribe and turn on notifications so whatever YouTube does with the algorithm, you'll always be up to date on the newest content. And please destroy that like button if you get value out of this video. Really appreciate it. So my portfolio update. Here's my performance over the last few years. So the last year is about 164% return. Over the last 3 years, this would be annualized rate per year. It's about 118% per year. And over the last 5 years, about 49% per year. And then since 2012, that's at least when my broker tracks it from, is about 28% per year. And I was investing before that in 2009 until today. So pretty good return so far, and I hope to continue these returns or even exceed them in the next 10 years and beyond. My portfolio breakdown right now is Tesla is the vast majority of my portfolio, 88%. Lemonade is the next one at about 6%. I've kind of rounded these the nearest percent. Redfin at Square at 4%, and then Redfin at about 1%, and Very Good Foods at about 1%. So first off, Tesla, I bought, my cost per share is about $104 per share. It's currently at about $6.50 per share. So overall, on all the shares I've owned, is about 500 and some percent, and it's about 88% of my portfolio. Again, I bought most of my Tesla in about 2018, but have continued to buy along as it rose over time. I've continued to buy and would still buy even more today. So why Tesla? I own Tesla because I believe they will dominate the vehicle space going forward due to their superior battery technology, their superior engineering, their superior engineering recruitment, their superior charging infrastructure, their superior data stack, their superior approach to full self-driving, and their superior CEO and visionary leader, Elon Musk. And finally, because of their superior mission, which is to accelerate the transition to sustainable energy, which is such a positive, enthralling mission that it attracts the best talent in the world and really pushes customers to be passionate about the product. You put all these pieces together, and I believe conservatively, I estimate Tesla will be a 2 trillion plus company by 2030. So maybe like a 4x, not quite by then. But I think easily could be, if I had to pick a number, it's going to be more like an $8 trillion company or higher by then, especially if they solve level 4 or level 5 full self-driving, which I think they will. Because I have such a high conviction rate behind Tesla, it allows me to keep such a high percentage of my portfolio in Tesla, because I really think conservatively it's still a good outcome. And then there's huge upside beyond that. Next company in my portfolio is Lemonade, and I bought, my cost per share is about $102 per share on average. I bought some in the 60s, and I bought some in the too high, maybe at $130, $140 per share. And currently it's about $88 per share, so I'm actually down about 13%. It's definitely been a company that's yo-yoed back and forth, up and down. And it's about 6% of my portfolio, and I would be adding to this percentage. It's one of the stocks I'm most bullish on long term. And I own Lemonade, and I'm a long-term Lemonade bull because two things matter most in insurance. It's how efficiently you can administer files, and number two, how good is your underwriting. Those two things. How efficient can you be just administering the files and making that super efficient, and how good is your data feedback loop, and what kind of data do you have to make the underwriting process better, or even the customer selection through online advertising better. Lemonade has built an incredibly streamlined system that benefits the end customer with faster, simpler, streamlined service, and benefits the administrators, meaning each Lemonade employee can handle many more claims than a traditional insurance broker. And they have a unique underwriting data advantage because the whole system is completely digital. And those advantages show up because they can look at things such as time of day that the customer bought a policy, whether the customer read the fine print or not on the policy, what Google search brought them to the Lemonade website, etc., etc. And basically, Lemonade can take all these different signals that traditional insurance brokers do not have access to at all in the traditional system that they have. But they can take all these signals and add them up on top of each other and basically correlate them with, this is a great customer who's not very unlikely to have an insurance claim, very responsible person. This is a less responsible person who's much more likely to have an insurance claim. And the people that are more likely, they think, are going to, be safe customers, they can aggressively target and advertise to those people. And people they think are going to be much more dangerous customers, they can try and avoid them selling insurance to those people. But at the end of the day, I think this perfect system could drive Lemonade to become a massive company. And I've said before that I could see them doing a potentially 100x over the next several decades. So I'm very bullish on Lemonade, and I will be adding to my position over time. And they'd probably be the second company I'm most bullish on after Tesla. So next up is Square. So Square, I bought my shares at about $129 per share. The market price right now is about $260, so just over 100% return. And it's about 4% of my portfolio, which is kind of where I'm keeping it, probably not adding much. And I tweeted out my thesis behind Square the other day, and it kind of boils down to these few points. And these few points really are what could make it sort of the ultimate bank of the future. So I'll read those for you. The thesis behind Square is, number one, you make the ultimate streamlined bank, which I believe they've done with the Cash App. And then you rapidly grow and incentivize people to join that bank, join the Cash App. And then you utilize, which they are doing, and then you utilize network effects of having more and more people, and now businesses, because they recently introduced Square Banking, under one banking roof. And one of the major network effects of this is having instantly processed transactions. So far, so good. Okay, and to break that down a little bit further for you guys, I think Square could become the ultimate massive bank of the future, because their whole banking system is extremely lean and efficient. They're not like traditional banks that have branches everywhere, expensive actual physical branches. Everything's sort of completely lean and efficient, kind of like Lemonade Insurance. And they have powerful network effects. I know there's many different ways to send money back and forth digitally between people fairly easily nowadays, but there's still always some friction, some costs, some minimum payments amounts, some amount of time, might even be 10 minutes, might be for the transaction to process. And that's because you have different banks that are operating under different silos, under a different roof, kind of controlling one transaction. They have to speak to each other and accreditate those transactions and help them process or go through. But if more and more people are incentivized to join the Cash App and know their friends and family has a Cash App, and the Cash App becomes available in more and more countries, and more people in your own network of people you might be connected with have the Cash App, it becomes a very, very powerful network effect, because suddenly all your friends and family have the Cash App. If you want to send somebody 25 cents even, and they have the Cash App, you have the Cash App, boom, in a few seconds you can send them digitally 25 cents. It's hard to do that with other payment platforms that are out there that do it as efficiently as it would be under one roof. So in my mind, there's a lot of powerful network effects if they can grow fast enough, if they can grow big enough in each market that they're sort of playing in, so that the people and the networks within that reach a tipping point where they need to have the Cash App and they need to use the Cash App as their bank and then eventually their primary bank, because everyone they know also has it, and it's so convenient for sending money back and forth. Number one thing I always watch for with Square is their Cash App user growth. If these numbers ever begin to falter, I would sell my position. because it would mean maybe the network effects are not strong enough. They didn't push hard enough. They didn't incentivize hard enough. And other competitors, other, digital banks, streamlined banks, traditional banks are fighting and pushing in that marketplace. And then if that happens, they're just an overpriced banking app. So that's kind of the two outcomes, what I'm always watching for. And I would let you know if I sold my position. So make sure you subscribe if you're interested in Square for that. I also own Redfin that I recently purchased. So Redfin, my average cost was about $63 a share. It's about $58, so I'm down about 7% right now. It's about 1% of my portfolio. So just a small little piece of my portfolio. Thesis behind Redfin, it's that real estate is broken. It's not customer centric. It's also very, one of the non-customer centric pieces is that it's very expensive to use a realtor, and for the value that they potentially provide, and or that could be more digitally streamlined and made simpler for the end user. Redfin is my favorite play thus far out of the real estate, sort of digital real estate broker industry, because they seem the most driven to build a comprehensive solution to the real estate customer, be it the buyer or the seller. Still a tiny position for me. I'm still researching this one to see how kind of well they're actually executing on that entire vision or mission for their customers, because that's going to be critical to how big their success is or not. Last one in my portfolio is Very Good Foods, which I bought at about $2.40 a share. It's about $3.10 a share right now. So it's about 29% return, and it's about 1% of my portfolio. I got in very early to this one and then bought a little bit more as it got a little bit more expensive, which is maybe unfortunate, but I believe plant-based foods will grow in popularity for various reasons, but I think they will. And I'm waiting for them, for this one especially, to ramp up their Rupert facility, which is in Vancouver. Seems Very Good Foods, their main issue for the last several years has been production, as they've only had one facility in Victoria, BC, Canada. Actually visited that last fall, tried some of their products, so check out some of my videos on that if that interests you. But the major sort of threshold and really, will really tell whether this is a huge success or not is their Rupert facility they're ramping up right now in Vancouver area, which is going to have, I think it's like, I forget, like a 37x increase in production over their Victoria one. So their products are going to show up in a lot more places, and really we'll see how well do they execute on that ramp up, which they're doing right now, and how well are the products received. If there's some really good success with this, and the stock really takes off, or really, gets some hype behind it, I might sell out of this one and flip it into something what I have higher conviction for long term. But for now, I'm going to hold my position until there's more news about that Rupert facility and what happens with it. Other stocks I'm also looking at right now, I'm still looking at Zillow and Opendoor as other real estate plays. I did a video on one called Semler Scientific, SMLR. I didn't actually buy the company, but I would buy some of it, or a small portion of my portfolio on a dip. But I want to know with greater clarity how much better their product is than the traditional testing method before I would go in at any sort of a larger amount. But if there's a major dip in the market, I would take a small position there. I'm also, another one I'm interested in is something called VIQ Solutions, which does transcription services for legal and professional uses. I'm reading some about that one and researching that one still. Another one I've seen a lot on Twitter, which is interesting to me, but I don't know a lot about, but I'm probably going to look at, is ClearPoint Neuro, which I know helps administer drugs into your brain. I'm going to be researching, maybe looking at that at least a little bit, seeing if I can understand what makes it such a great company. Anyways, if you got value out of this video, and if you're interested in any of the stocks I cover or might be covering, or any other future potential multi-baggers, I definitely encourage you, hit that subscribe button down below. Thank you so much for watching. Smash the like button. And remember, it's in the bag. Cheers.